All new to the Compound and Friends. Welcome back, everybody. Today's going to be an awesome show. We have an extremely knowledgeable and yet nervous friend to introduce you guys to. First time ever on the Compound, Will Hershey. Welcome to the show.
I shouldn't have told you that. That was between me and you, Josh.
Too bad. We're actually very excited to have you. So I want to give people a little bit of background. Of course, don't let me forget, Ben Carlson's here. Ben, say hi to everyone.
I'm really jealous of your DJ board over there.
Yeah, I'm sorry, you can't have one. But
I'm very confident in my assertion.
But I have you captured right there.
Also, the intro music. I'm like hyped now.
That shit is fire, right?
Yes,
Put that back on for a minute.
Man, the nerves are gone.
Put that back on.
I feel like I need to drop a beat.
Will Hershey, former analyst at Yorkville ETF Advisors and head trader at Yorkville Capital Management. Current co-founder and CEO of Roundhill Investments. Will has invented a variety of popular thematic ETFs. All right, start fading. I don't want to compete, Duncan. Including NERD, Nerd, which is esports. Bets, BETZ, which is sports betting. Metaverse, METV. And meme stocks, MEME. And you just launched a new ETF. Are you legally allowed to say it, or do I have to say it? What are the rules around that?
You know, that's tricky. I think given that this is like technically not live, but live, I'm allowed to say it. We launched weed. We launched a cannabis ETF on 420.
Okay. Are your parents proud of you for that one?
Very much so.
Okay. Got it.
Very much so.
All right, weed. How'd you get that ticker symbol? That's crazy that was available.
Yeah, I mean, how did we get that symbol?
Buy it from someone?
I have to give a shout out to Phil Bach.
Okay.
If you know
Shout
Phil
to Phil,
Bach,
sure.
he helped with that. But when we got our hands, you know, normally you're going to come up with an idea for an ETF and then back into the ticker. This was one where we're like, we have
That's
the best.
available?
We have
Make
the
the
best
funds.
ticker. Exactly. No,
Who
that's
squats
literally
on all these? Who's squatting on all the good ticker symbols?
That's a whole thing. You can go to the exchange and see if a ticker's available and reserve it for 2 years.
How much you have to pay to reserve something?
$0.
Like that?
$0. It's
So
free to reserve.
they're pretty short-sighted. They should be selling that.
So it's this weird
worth
thing.
more
Like
than
Real estate in the
NFT.
metaverse.
Well, I mean, they don't really. The exchanges don't really own it. They're reserving it on behalf of their clients. So I don't know if that would be too kosher, but no, it's a whole thing. It's a whole thing trying to get the best ticker.
So somehow you got the best possible ETF ticker for your new fund. And when did it go live? Yesterday.
Yesterday.
Oh my God! Still got that new weed smell.
Oh yeah.
Okay. So why is that the right way to play? Let's just start right there. Why is the weed ETF? Why is it constructed in such a way that you think it brings something new to the table for people that want to invest in cannabis or whatever the Winnie the Pooh with the monocle version is? Right. How we refer to
Marijuana would be like the narc version of
Marijuana.
that.
Yeah. If you say marijuana, I instantly don't trust you.
I think cannabis is the.
Cannabis! That motherfucker is a scientist. You hear? He's like, all right, but so you're saying it as cannabis, right? Is that what?
Cannabis is how you say it in your prospectus. You don't call it weed in the prospectus. If that's helpful in terms of understanding what the scientific rules of the road are.
Oh, your prospectus doesn't say this is a way for investors to bet on grass.
No, we don't say that.
All right. So it's the weed ETF, and what's the official name of it?
Roundhill Cannabis ETF.
Okay.
That's
what
the
are you
name.
allowed to say about like how it works or what's in it?
Yeah, I can share that. So it was actually a long process to launch this fund, much longer than typical for an ETF because we had to find swap counterparties to be able to trade total return swaps. So underlying the ETF, it's not just straight equities because a lot of these names, you can't even custody them at a traditional bank. They won't touch it because they're plant-touching names operating in the U.S. So it's still federally illegal cannabis, right?
Right? Isn't it a deal like you can't put the money from that into the bank still, like federally?
Well, that's a whole nother thing too. Is that's why it's really hard for these guys to get access to capital. The cost of capital for cannabis is still really high.
But don't you feel like there's so much money for cannabis, like in general?
I mean, people want to invest in it. It's just the way the rules are written right now. It's difficult. But anyway, so the way we've constructed it, it's pretty much more or less market cap weighted. But we are investing in these names that people, quite frankly, can't access easily. And that was a big part of getting this thing launched in place. We had to sign an ISDA, right? We're in the big boy leagues now, trading total return swaps, but exposure across the space, predominantly focused on the U.S. players. Which, honestly, when I started to learn more about this space, I was shocked at how cheap they are. They trade at low double-digit EV to EBITDA multiples with growth. Right, it's not just like this is a value trap. These things
Why
are going to.
do you think? All right, why do you think? So these are tiny market cap companies.
Tiny.
Even the biggest producers that are publicly traded
4
in
billion,
Canada,
5 billion,
or they're so small.
Yep.
Why?
This is it. I mean, the second that they're
It's so hard to put money into them as an investor.
even institutional investors can't trade these things easily because they're listed on the CSE. You probably don't even know what that exchange is, the NEO exchange, and they all trade only OTC.
What the
in
hell
the
is
US.
the NEO exchange? Is that like Vegas downtown? Is that like Binion's Horseshoe?
I wish I knew. Canada's the Wild West. If you ever looked at like the TSX Venture,
Yeah, those guys are crazy.
it is crazy.
Those guys are fearless.
But I do think it's kind of this whole thing of just they're illiquid names. They're super thin. The market caps, if and when they uplist to NYSE or Nasdaq, that's why Tilray trades at a huge premium to these U.S. names
Because it's uplisted already.
because people can trade it. There's liquidity.
And that's
Institutions
still
are
only a
comfortable.
$2.6 billion company. So
Yeah, and
in
that's
the grand
big.
scheme of things, it's pretty tiny. That's the biggest one, right?
That's no, it's not the biggest one.
Is that the one that Constellation invested in?
that was Canopy Growth?
Canopy
I wanna
Growth,
say.
CGC.
So all of those names, though, the ones that trade on NYSE or Nasdaq, they're operating in Canada. It's weird and then the names that are operating in the U.S. trade in
Pinches.
Canada.
Or
on
trade
the,
in Canada.
On the NEO. Come on.
The whole thing's a mess. Why are we still doing this?
I don't know.
Okay,
I don't
but
know.
when there's more regulatory clarity nationally, let's say Biden decides he wants to get reelected. This seems like a really easy thing for him to be like, I'm into this. Like, he
Totally.
could hijack this whole thing and like get young people to actually remember that he exists.
He's like,
Totally.
hey, I had quarter of a gummy last night. Look at me.
Yeah. Like, it would actually explain him shaking hands with the air and forgetting where he is halfway through a sentence. If he's just like, honestly, guys, I was with Willie Nelson this morning. I'm sorry. Like, I feel like that would be helpful for his image.
I mean, it should be bipartisan too, right? I mean, the tax revenues.
Everybody smokes. Yeah.
And the tax revenues are meaningful, right?
Dude,
I
it
mean,
cuts across race, age,
Yes.
gender.
Yes.
Everybody's high.
Yes.
Like everyone that I feel like most of the people I deal with, I don't smoke weed. Most of the people I deal with on a daily basis, they can't be that stupid. They have to be high.
Well, the other fund you have, the bets, sports betting. They all, like, once a couple states did that, they all realized, oh wait, we can make a ton of money off this in tax revenue. Why wouldn't we do this?
Yeah,
Same
no,
thing, right?
It's in a lot of ways it's a similar thesis. The difference there is sports betting since 2018, the repeal of PASPA is now legal at the federal level. Now is rolling out state by state. Cannabis is kind of almost the reverse, where it's rolling out state by state, but still not federally legal.
Right.
But no, the thesis in a lot of ways is the same story. It's a shift from black and gray markets into regulated markets where you get tax dollars. States love it for that reason.
Does there need to be consolidation there? Because like all these stocks have gotten crushed. DraftKings is down almost 80%.
it's crazy.
Do they need to get together to? Is that how it has to work?
Yeah.
His sports betting fund went from large cap to small cap. It's a small cap index.
I shouldn't laugh at. I should not laugh. at that.
Your universe is now a micro cap index.
I should not laugh at that. No, I think there will be consolidation.
Okay.
When you look at sports betting, I mean, the biggest cost for these guys is customer acquisition, marketing. I mean, if you watch the Super Bowl, how many of the ads were Caesars or DraftKings or FanDuel?
And they give away a ton of free gimmies to people if they bet.
Oh, did you do the Caesars one? They matched $3,000 if you deposited it.
And by the way,
Customer acquisition is like so completely out of control in that space right now.
I had never done it before until it came legal in Michigan. I'm like, I'm gonna do it. It's so much fun.
It is fun.
It's so much like
It is fun.
betting a little bit of money on a
You
game.
know, I never put money into DraftKings or I never bought any of these stocks only because somebody from England was like, that shit's been legal here forever. It's
true.
It's not that great of a business. It's like OTB.
It's a decent business. I mean,
What are the companies in Britain? Ladbrokes?
Flutter.
Flutter.
They had Ladbrokes. William Hill got bought by Caesars. Entain, which is
Right, but
BetMGM's
these
partner.
companies are not like Google.
They're not
in the
Google,
UK.
but
it's
it's
very dingy locations.
Well, the physical is not a sexy play.
Right,
I mean,
right,
it's
right.
really the online.
How hard would it be for a broker to get into this? Because Robinhood wanted to do sports betting. Could they legitimately do that?
Oh, I mean, the licensing is like half the battle, right? You have to work with
Cantor
state
Fitzgerald
regulators.
was trying to do that a decade ago.
Oh, yeah.
They built a sports book in
Yep.
Vegas or something,
I think they did.
anticipating that one day it would be national, or I don't
Yep.
know whatever happened to that. I want to back up a little bit. So you and I, you were here when 2019? You said.
Yep.
2018.
2019.
2019. And what were you? 18 years old at the time? No, but
Let
you
me
were,
do some math.
But you're like a kid, and you're like, I'm going to start doing some of these thematic ETFs. We did one, seems to have been well received. I think I can like really make a go of this. And then I think the pandemic was probably really helpful for
Yep.
some of your categories,
Totally.
right?
Totally.
But you did this from scratch.
Yes. I mean, I would say
Are you
it
by
was
yourself? As the owner? No, are you the main owner?
my co-founder and I. Yep.
Your co-founder, or
Yep.
it's two of you founded Roundtail.
Yes.
Why is it called that?
Resort in Jamaica. Really nice that we've been to.
All the,
tell you
all the
something?
Greek gods were taken. Those
Can I
names.
tell you something? That's not such a bad story. The Carlisle guys named it for the hotel. I think they were sitting
there
in the
you go.
lobby.
There you go.
They said, we're Carlisle Group. It's only a $15 billion company, so not bad.
But yes, the pandemic definitely helped the categories. I also think the pandemic.
Wait, let's back up.
Okay.
AUM is what now?
We hit 1.4 billion.
Shut the up. Look at this. Look at you.
I think we're now down to one-ish.
Dude.
Market's not helping.
Okay. $1 billion, though.
Yeah,
In
$1 billion.
what, 3 years?
Well, June 2019, we launched our first fund. Where does that put us? Almost 3 years?
Dude,
awesome.
you did the thing.
Yeah.
You did the thing.
Yeah.
What does an ETF company need to be like break even and like good? Like 500 million? 200 million?
No, much less than that.
Much less.
On a fund level, depends on your expense ratio, obviously, right? If you're charging 5 bips like Vanguard or iShares, different story.
I don't recommend doing that.
I wouldn't try and compete in that game.
Okay.
40, 50 million, you kind of start to break even at a fund level, and then you have, OpEx just to run the business outside of that.
And now you've built this infrastructure. So your
Yep.
job is like come up with enough funds to spread that infrastructure cost across so that it's like
Yep.
becomes more. So you don't necessarily spend a lot more money for the fourth or the fifth or the sixth fund.
No.
Do I have that right?
In fact, like a lot of the costs, custody, admin, a lot of these are kind of commoditized. So it's really, it's not even that there's not operating leverage in the sense you're talking about, but yeah, I mean, at this point, it's like, you got an idea for an ETF, like, let's do it.
That's very cool. Congratulations.
Thank you.
Very
Thank
proud
you.
of you. All right. Do you feel like thematic ETFs have historically gotten a bad rap from behavioral finance writers, but the audience loves them and doesn't give a shit what the literature says?
Well, I feel like the whole thematic name is new. Isn't that like a pandemic? Wasn't that born out of the pandemic, basically?
No, I mean, people have been talking about thematics for a while. I think Cathie Wood, ARK, people
Yeah,
consider
that was-
those thematics, and
Yes.
it was like, wow, the assets,
innovation,
the
that's the
assets
theme.
in this kind of part of the ETF world is now
But
like
they're
really
almost like
significant.
they're almost like sector ETFs now, right? In a way, like at least
They're
that part
micros,
is.
but they're micros. Like the way Will is slicing and dicing, like esports is a micro sector. I guess you would call it a niche,
Yeah,
but
Yeah.
it's
How,
not.
how many ideas do you come across that you just can't fill it with enough stocks yet? Where you have a great idea and it sounds like a wonderful thing people are latching onto, but there's no market for it.
Oh, let me solve that. You just throw Google in it.
well, that's the thing. I mean, that's how a lot of these
You know,
thematic
you know,
funds
right?
end up,
Yeah,
right?
yeah.
They all own the same stuff. I mean, think about the ESG funds. They own, ExxonMobil, and it's like part of like
Are they back into
part of
that?
like it's just like part of launching, in my view, a successful ETF is like, does this shit make sense? Is what's in the portfolio literally like what I see on the tag? Like what I'm buying? Am I buying what I'm
Does the
intending to
portfolio
buy?
match the tag?
Correct. To your point, if
Yeah.
Google's in, the top holding in XYZ fund,
Yeah.
is that really what I want? No, this isn't core beta, part of your portfolio. This is, you put a little bit in because you believe in the theme.
Does there have to be a certain number of stocks? Like, do you have a threshold you have to get above?
There are rules. So there are some diversification rules.
You saying SEC rules or
SEC
rules that you set up?
1940 Act rules, registered investment company
You
rules.
can't own 8 stocks.
Okay, here's a
Can't-
question.
can't
for
own
all the-
8 stocks.
How come
That'd
every
be awesome.
regulation is 1930s or 1940s? Where are all the new regulations? Every act goes back to the 30s or 40s.
Joe Kennedy wrote them all before manipulating the election to
But
put his kid in
all
office.
these acts that are like 1932 Act or like
I wish I was exaggerating, by the way. I'm totally
how
not.
could these still be relevant today?
How can SEC regulate? Well, that's the whole thing with mutual funds are like the latest in 1940s era fund technology.
Yeah.
They don't refer to the ETF as the 1990 Act or whenever the first ETF came along, because the ETF basically is abiding by exemptions from the 40 Act. That's interesting. It's a good point.
That changed though, and that's why you've seen so many new ETFs come to market. So you used to have to get an exemption called exemptive relief from the 40 Act, basically to do things in a slightly different wrapper that wasn't contemplated in 1940. That's how it used to be. It used to cost $2 million in legal bills to be able to do that. Now it's much more, it's Rule 6011 passed.
It's more streamlined.
But that's why you're seeing more entrepreneurs launch ETFs. It's the barriers to entry have come down, which I think is great.
Yeah, it's awesome. Like, think about how many people just from finance Twitter that we know that have done independent things and have started their own based on their brand or whatever.
A lot. One of the pioneers there was Meb Faber.
Yep.
And shortly after, the Pennsylvania guys came along and started, doing cool shit. And now we probably, I don't know, you and I probably know like 20 or 30 people that have their own ETF.
Yeah,
right?
It's great.
Give or take.
Yeah, and like you said, I think the barrier to entry is way lower than it used to be in terms of assets.
We were getting pitched like 7-8 years ago, maybe longer. Barry was getting pitched hard, like do Ritholtz ETF, do a Ritholtz ETF. But like the two of us would sit there and like, but anything we put out, people are going to be like, that's your track record now. What strategy or category do we even think that it makes sense for us to have? So there was never an idea that made sense for us to do it. And the other thing, though, there's a lot more regulatory scrutiny the way that you talk about an ETF because it's a product.
For sure.
So we just it never made sense for us.
Do you guys, in your portfolios, do you pick stocks or is it just more asset allocation?
Depends on the portfolio.
Yeah, right.
So,
because if there's some, if you're doing emerging markets where you're actually picking the stocks, that could have been something.
But here's the problem, though. Then can you put that in a client account? No.
You can maybe waive the fee.
That's a pain in the
ass.
ass.
That's the difference where most ETF providers have no idea who their clients are.
I have no idea.
That's
literally no idea.
That's the difference.
I'm pretty sure that your client is not my dad in the weed ETF. Like I'm 90% certain.
You sure?
99% certain.
Maybe he's in the metaverse one.
He might be in the metaverse one.
That's more his.
You don't think your dad was at Woodstock?
But you skew. You skew young.
Yes.
Just because of you should skew young. If most of what you're doing is futuristic stuff.
Yep.
Right. So theoretically, that should be the types of stocks that require a long runway to work out.
I also think, so you talked about the ETFs in the 90s. That's like a break point. 70s is index funds. I think we're going to look back at 2020 and think this changed the way people think about investing and how they invest. Like young people.
In what way?
There's just so many more things to invest in. People are just more into it now. There's more of a community aspect. I think that the investing world for young people now is so much different than it was, and I think 2020 sped that up a lot.
Totally agree. And kind of what you touched on is part of our whole thesis from the beginning. Actually, when Tim and I started the business, it was after the crypto run. What was that, 2017, 2018? We started to see signs of that. It was like people were talking about...
Tim Cook?
My co-founder.
Oh, okay. Who is that, Tim?
Tim Maloney.
Okay.
When we started to see people on Reddit, on Discord, forming these communities, and it was like widespread how passionate they were. We said, look, the world's changing in the way that young people are thinking about investing. They're becoming more active again, I think, than kind of passive in a way. Let's build a business where we do zero outbound sales, which we still do to this day. No emails, no calling. Let's focus on content, research, reaching as many people as possible. And reaching young people is a large part of that strategy, just given the themes we focused on. But that's how we've done it.
But you did it.
Yeah, we did it.
That was the thesis, and it worked.
And I'm jealous of young people because when I was coming up, I had none of this stuff.
No,
you couldn't. You had to read old Warren Buffett books. Like now, young people they're so much more knowledgeable because the knowledge is there for them if they want to find it.
100%.
Well, it's a double-edged sword because they're also coming across a lot of things that look like information but aren't.
Yeah.
And it's really hard to discern.
Yeah, you need that filter for sure.
What does that mean?
Most of the influencers on Instagram or TikTok literally don't know anything.
Oh, okay.
And it's not that bad that they don't know anything, but actually it's worse. It's dangerous because the things that they think they know are completely wrong.
Yep.
And there's a lot of blind leading the blind going on amongst young people, but I don't think that that's any different than any other generation. It's just more obvious now because there's social media.
It's easier to reach people.
Yeah.
Yeah, so you could mislead people in a message board in 1999, but you probably couldn't amass 1 million followers on TikTok and be held up as an example of somebody that's like, Now, the one saving grace to that is most of the content is like motivational speaker content, like, I empower women, young women to invest. It doesn't matter that that person literally knows nothing. What matters is that they're addressing a category of investors, for example, 20-something-year-old girls who were not being engaged by the traditional investing community for a long time.
Yep.
So maybe the encouragement is like enough to overlook how horrendous the information is. And it's just like, all right, cool, there's encouragement. Maybe that's what people need when they're young. And if it's somebody that looks like them and appeals to them, you could overlook like some of the misinformation that's being shared. I'm trying not to be too pessimistic about online influencers. I'm trying my best to be diplomatic, I guess. You can see how hard I'm working at this. All right, let's get down to brass tacks. Netflix blew up this week. I think it's down 36% or 40%.
Listen to this.
From
November 2021. This is just in November. Netflix was at $307 billion market cap.
$700 a share.
Now it's down to less than $100 billion. Like that.
Yeah. So the stock's at 2018 prices, but they have double the amount of subscribers as they had in 18. $209 billion in lost market cap, 68.5% drawdown from the November high. Is this one of the biggest blowups you've ever seen?
There have been so many over the past year, right? I mean, like, where do you even start?
Shopify's down 70% as
PayPal,
well. PayPal, yeah.
Roku.
I mean, where does all this market cap go? Does it just go right into Apple?
It seems like it's going to Apple and
I was
Tesla.
telling Will before we started. John put this chart up at the end here for equal weight. Look at this, Josh. Equal weighted S&P versus the S&P. Equal weight is down 4% from the highs.
Okay.
That's crazy. It's crazy to me even that the S&P is only down 8%. The pain under the surface
if you
is
think
crazy.
about all these tech, like ex-tech stocks, this is not that bad of a correction at all. It is basically all tech stocks. It's all speculation. And I don't know, if you would have told me 15 months ago, hey, all this tech stuff is going to fall 50 to 70%, the market's down 8%, I would not have believed you.
Yeah.
And it's not just IPOs and SPACs. It's like Facebook or Meta and Netflix and PayPal. These were some of the biggest market cap companies in the world.
Totally.
And they're in half.
But I mean,
or worse.
Part of it makes sense, right? Like look at Netflix. They're going negative to no growth. Like, what multiple do you put on a company that's
so let's set this up. They were supposed to have added 2.5 million subs in the last quarter, which is slow. Right? Like they had already guided in January that things were getting slow. So that was like a low ball of a low ball. And then I think they lost 700,000 subs by exiting Russia. And then they still would have missed anyway, even without the Russian thing. They ended up negative 200,000 subs, which is the first time ever, I think, in a quarter that they've lost
It's interesting
net
that
subs.
Within that same, 4-month period, Facebook had their first decline in users, and so did Netflix.
First of all, I think a lot of these companies have fake sub numbers anyway, especially Facebook. I think half the activity that happens on Facebook.
But Netflix is low
fake.
because of that number's got to be too high. They said 100 million people share passwords, so their subscriber count is lower than it should be probably.
So I don't even know what that means when they say it. They're saying 100 million people don't actually pay,
that they just steal their mom's password.
That's what I do. That's what we do.
Or 100 million people are sharing, meaning some of them are paying and some of them aren't.
Right.
Oh,
I don't even know what that number means.
Yeah, no, that's a good point.
I asked like 3 people that really know about this stuff, and they're not sure what that.
I think they're getting,
the implication is if you could get like a fifth of those people, 20%, to say, okay, well, I don't want to get completely cut off. I'll give you $10 a month. Isn't that 20 million new customers out of 100?
So they talked on their earnings call the other day that they would think about doing an ad-supported version now, which they said they would never do. So I can't tell if that's a way to get those people or if that's just really desperate.
I mean, they should have done that, 2 years ago before all the competition came into the space. But I think that's smart. You give consumers more choices, right? They have, like, when Netflix was really kind of crushing it, they were the only game in town.
Yeah.
Now there's a zillion streaming services they have to compete with. But I think that's a smart move. Why not give people choices?
So Netflix is 220 million subs, which dwarfs Disney, which is their closest competitor. Disney is talking about getting to that level, but not until 2025. And it's not guaranteed that they will. HBO's not even close. So Netflix really has something that's not, even though they have a lot of competition, you still can't replicate that in terms of audience. They still have a bigger audience across which to spread all the content costs. So that's one. Two, the ad-supported tier, let's say it comes out at the end of this year. It's better than getting zero from all of these people sharing, right? So maybe that would be the answer. I don't know how popular it's going to be or what that does to margins or blah, blah, blah. But what I would say, this thing is now being valued like a TV network. And this comes from the information. Netflix basically is trading at the same multiple as Disney, multiple of this year's expected revenue as Disney. So all things being equal, Netflix now $100 billion market cap, $30 billion revenue, $5 billion in earnings last year, 220 million subscribers. Could it get cut in half again? Or would that, like, I feel like it's been substantially de-risked. I bought some, full disclosure. Yeah, I'm down immediately. I bought it on the open yesterday from a boat.
Oh, shit.
But not a lot. But, like, I can't imagine this thing being as risky as it was in January.
By the way, you just described a perfect commercial for Robinhood.
Yeah, I did not buy it on Robinhood. I bought it on Fidelity.
Netflix on a boat.
Pretty bad.
But I looked back. They've had 4 separate 60% plus drawdowns in their history. The worst one was like 80% in 2012. Remember they were going to separate the DVDs and that business or whatever?
Yeah.
They've gotten crushed in the past.
They got crushed when they said we're going to go international and we're going to spend all this money. And Wall Street was like, that's going to be a money pit. Ended up being the smartest thing they ever did. A lot of those international hits became U.S. hits and vice versa. They got crushed when they said they're going to double how much money they're spending on production. Like, there have been these episodes that the stock has recovered from. People feel like this time is different,
But much like the sports betting apps, doesn't there need to be consolidation eventually in some of these streaming services? There's so many.
There's too many.
Well, it's different, right? Because sports betting apps are relatively commoditized, right? They're all offering betting on the same games. The content is different, right? If you're Netflix and producing your own content, you can differentiate just by having the best content. And I think that's honestly they've kind of failed on that. Like, I'm not watching Netflix myself. I don't know if you guys are. I'm enjoying more.
Only when the new Narcos season drops.
There you go.
Then they have my undivided attention.
And then what else they maybe need to do is go to a weekly release.
Yeah, I think they need to do that too.
There's a story at the Journal with their head of TV being interviewed, and basically, like, they're going to be much more hands-on than they used to be. The whole rap in Hollywood with Netflix was like, they trust the creator, they'll just give you the money, no suits, no bullshit, like, make the best show you can. That's over. Now they're like, they have plot points, they have like notes.
If they did Ozark, the final 7 episodes over a 7-week period instead of doing it all at once, they would have podcasts and the Ringer would be doing everything for them. They'd get so much more publicity doing it that way than just doing it all at once.
But the problem is that they got the audience accustomed to binging, and people like the binge experience. So maybe the answer is somewhere in between. Maybe drop 3 episodes.
That's what Apple does.
Pause, drop another 3.
That could work.
I like that.
I mean, the other thing interesting they're doing, they've only just started, is legging into gaming a little bit. I don't know if you've seen this. They bought it like a couple tiny gaming companies. That's now on their platform. I mean, that could be an area for them to,
What do you think
churn.
they would do in gaming that anyone else couldn't or isn't doing?
Well, I think they can buy someone. I look at like Ubisoft trades at like $5 billion enterprise value. They're Assassins. I mean, imagine they could
so
also
it's like buying content, but instead of shows and movies, it's a game.
Well, even better, adapt it into movies and shows too. They did that with what was it? The Witcher is a game.
The Witcher was a game, right?
Yeah, that's a game.
By the way, as someone who's not a gamer, that show was unwatchable for me.
Oh, I
did not know what the hell was going on.
I hated it at first, and now I'm into it.
Okay.
The first episode was
what was it
hard.
about? I have no idea.
It's not really about anything. It's about no. It's a guy.
Someone said no. You have to play the game for 5 years first,
Yeah,
and then you'll get it.
No, it built its own audience eventually. I think they got picked up for season 3. It's like a guy who fights monsters, basically.
All right.
It's a binge.
That sounds like a show for my 5-year-old.
Yeah. Or me. Or your 45-year-old friend. All right. Options volumes went crazy on this Netflix. Stock and options volume. 100 million shares traded yesterday, which is the first time since 2015. Calls and puts topped all the most active lists. This is while the stock is having its biggest one day ever percentage drop going back to '04, $54 billion in lost market cap. Put options were going crazy. The 200s, the 190s. Traders shelled out $2 billion for Netflix options as of afternoon trading. So they're buying they're taking all the premiums of all the options traded to come up with that. There was more money traded in Netflix options premium than Amazon or even the SPY ETF. Is that surprising that so many people wanted to express a view on that stock on that date yesterday, or is that just like
No.
catnip for retail traders?
That's just like, I mean, I bet Facebook, when they had their blow up day, was the same thing.
It's hilarious
right?
how that happens. Yeah.
It just became like you have to be a bull or a bear on Netflix.
Yes.
Myself included. I was right there.
Hit the button. Yeah.
Well, whenever there's a day in the news cycle where in the financial media where everyone's talking about one name, retail's going to participate in that too.
You're going to trade it.
But so are institutions, right? They can't help that same urge to kind of take a view on something. That's
it's an S&P stock, so they have to have they're either overweight or equal weight or
Yes.
underweight.
How much did Ackman end up losing? Because he got out. He said, did he lose a lot of money, or was it just like?
So I thought this was interesting. He owned this loss immediately. There were press reports that he could be down as much as $400 million. And he put out his own press release. And I guess, this is a good lesson. Maybe never own so much of a stock that to sell it, it requires a press release. But he's basically here's the Pershing Square letter. We require a high degree of predictability in the businesses in which we invest. Okay, good luck with that. Due to the highly concentrated nature of our portfolio. While Netflix's business is fundamentally simple to understand, in light of recent events, we have lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty. As soon as I read this, I thought of you. Can you tell me a business that you can, quote, have confidence in your ability to predict the company's future prospects with a sufficient degree of certainty? What would that be, like a utility and Hershey's?
Well, it is funny how quickly this psychological shift has happened, because before it was everyone 15 months ago or 18 months ago was saying, how big could these companies possibly get? And we're anchoring to these huge, well, if Apple can go over $1 trillion in 5 years, other companies can do it, then that we're going to pull everyone up. And now it's like Netflix at 300 versus 100 billion. It's like, which one is right? I don't know.
Well, now it's 20 times trailing 12-month earnings. It sounds more right now than 40.
Yeah, but that's the thing. That's how the psychological shift for these growth stocks is those multiples are still pretty high though. If their growth is going to slow down.
20 might be too high if they don't add any subs net for the whole year.
20 feels high when a stock is crashing and low when it's going up.
Right. When it's going up, 20 is a discount to the S&P. Yeah. Wait, why could I buy Netflix at a lower multiple than the S&P? Now it feels like 20 times.
But the thing, my biggest takeaway here is that for the last 3 years, the growing chorus of people have been saying, why would I own anything besides tech stocks? Tech stocks are all there is to own. And finally for the last year and a half, diversification has shown oh yeah, that's right.
What if this is an inflation story? Let me hit you with this. This is New York Times. Another concern some analysts say is so-called churn rate. Consumers are growing warier of rising prices for streaming services. They upped their subscription cost in January, and becoming more likely to cancel a service when a favorite show comes to an end. According to Deloitte, 25% of U.S. customers have canceled the streaming service only to resubscribe to it within a year. I would not have guessed that 1 in 4 people have time for that shit to turn off Netflix until their favorite show comes back. But apparently I'm wrong, and that is way more prevalent.
Mr. I'm never going to cut the cord ever, me?
Yeah. What'd you cancel?
Nothing. I own cable. I own the cable bundle, and I'm looking awesome now because I don't have to deal with jumping in and out of these streaming services. Cable TV for the win.
But which of these streaming services are you paying for?
All of them.
Right. In addition to the cable bundle. I'm doing the same thing.
But here's the problem. If you wanted
You doing that too?
No. But I was joking recently that we're in a much worse place now that we were just paying a million different
either
companies.
way, you have to pay for at least internet. So if you're paying for internet, if you just pay for internet, not cable, they jack up the internet bill for you. But if you bundle it, then it ends up being just about the same. So you might as well get the cable too and have a million channels.
Are we going to go back to cable? Is that what?
Dude, I called them 3 years ago. I said, if you don't give me Red Zone right now, I'm canceling forever. FiOS. They go, okay. I'm like, that's it? Because I'm from New York. I would have gone 8 rounds with you.
I'm going to count to 5. Then I'm really leaving.
I'd pay for just Red Zone alone. I'd stream I'd put that as a streaming
So
service.
I love it. And obviously, like, I would pay for it because it's not that much money. But it would never occur to me that I have to have it. My kid has to have it.
Fantasy.
Yeah, he will sit and watch 12 hours of Red Zone. Like he would watch repeats of Red Zone that night if it didn't end at 6:30 or whatever time it ends.
Before you move on, can I ask a quick Netflix question?
Sure.
What does it tell you that I saw that Reed Hastings bought like 50,000 shares back in late January? What does that tell you?
What? That nobody knows nothing?
Like 387, I think.
He's got too much money. I don't know.
He did an open market insider buy in January.
Yeah, if I'm looking at this right, yeah, he bought.
He should average down. You know what's funny about that? His average cost is like 0.
That's true,
right?
So if you see him doing that, it's not actually to make money. It's the signal.
Matter.
All right. Anyway, 25% of customers have cut a streaming service and then resubscribe to it. I feel like you need a lot of like time on your hands for that to be worth it. Save like $18 for 2 months or whatever.
Right.
But apparently,
maybe right now people are thinking that it's worth their time though.
Yeah, because the cost of everything in their life has gone up.
Gas prices, right? I mean,
so maybe Netflix has finally run into the price point at which they get pushback, because they've been able to raise the price every 18 months, let's say, and now I think they ran into a wall. It can't be coincidental that they put through a price increase in January and almost simultaneously had to guide lower on net.
Can I give a get off my lawn
subs.
take, please?
Please.
When I was growing up, we'd go to the mall and buy a DVD for $19.99 for one movie.
Yeah.
Now people are complaining about paying $14.99 for Netflix.
So true.
That has thousands and
Because
thousands
you have
of
to pay
options.
for
that's such a
6
good
of them,
point.
though.
That's such a good point. You don't have to.
Well, you kind of.
I'm just saying though, like if you look through the movies on there, like 12-year-old me would be just blown away by the selection.
Yes.
And now people are like, ugh, it's terrible.
Yes.
That's true. We're spoiled.
You have access to 1,000 movies you can watch on your phone. You can continue it watching when you get home. Like,
Yes, it's still a pretty darn good deal, even if they don't put out that great of entertainment anymore.
Will kids these days?
That's what I'm saying.
They don't know how good they have
Exactly.
it. I want to go back into thematic investing. I asked Sean, our researcher, to run some numbers. Maybe these are accurate. I think he's got the right numbers up to date. Thematic ETFs are only 1.6% of the whole U.S. ETF industry's $6.9 trillion total assets. Wait, do I have that right?
What was the number?
110 billion in thematic ETFs. He's using 6.9 trillion total because he's probably including bond funds too. There are now 240 thematic ETFs, and you have what? 5 of them? 4 of them?
7.
7 of them. Okay.
Yep.
Who's the biggest player other than Kathy in thematic ETFs?
Besides, Kathy is only biggest on AUM, right? She only has what? She probably has similar number of funds.
Another Kathy hater.
Maybe.
No, I'm just kidding.
Get out of here! Get out of here! I'm a fan.
Shouts
I'm a fan.
No. We're all fans of hers.
I would say Global X is probably the biggest. They kind of pioneered it in a lot of ways.
What was their first big one?
Oh man, I'm trying to remember. They did some country ones that were pretty big.
They've been around like 15 years. They've been around for a minute.
They were around before the financial crisis, maybe right around then they started.
I know you said you don't really know who your customers are, but how many advisors do you think are getting in here where you could say, hey, put 5% of this versus just being completely retail if you had to guess?
Honestly, it's so crazy. Like that is the holy grail, to try and understand what works, what doesn't, right? And like who we're reaching. I would say, I mean, very rarely do we get reached out to by advisors or institutions that say they really want to do a deep dive on fund XYZ to really understand it before they allocate. So even those types of players
can do that without talking to you.
Well, yeah. I mean, that's the thing with ETFs. It's like the holdings are public. Like everything you would need is on the website of the issuer. You know, if you want to go into the nitty gritty of the index and how it's maybe. But like that's what's beautiful about them too, and that kind of comes back to the other thing.
You're publishing the index rules too.
Yeah,
so it's all out there.
It's all out there.
Okay, which requires a less heavy-handed sales approach, which I think everyone appreciates.
Yeah.
Right?
No one wants
less
to be
tote
taken
bags.
out. Yeah. No one wants to go out for well, maybe some
I still
people
do. I
want to
still
go
do.
out for a steak to buy my fund because it's, one bip lower than the other guys.
Right. You don't have to f***ing golf with people.
No,
and all
I don't
that
do any
shit.
of that stuff.
Right. On a year-over-year basis, thematic ETF assets under management decreased 21% from 139 billion at the end of February 2021. So that's all market effects. I don't think that's the public's changing taste. It's just thematic ETFs tend to be tech heavy, and tech has been routed.
I think
that
that's
right?
I think that's fair. A lot of that's probably price. I mean, just anecdotally from our side of things, our drawdown in AUM is almost all price. We've seen a few kind of trickle out, but really people hold on to these things for the long term. And yeah, it's definitely tech heavy. It's definitely even beyond tech, longer duration equities that people say
Themes, stories.
Stories don't play out overnight, and people
Yeah.
understand that, and they say, "I'm buying this for my kids' retirement, whatever." Not your kids' retirement. You know,
And
what
then
I
it
was trying to
drops
say.
30%. They're
You know what I
like,
was trying
no,
to say.
I'm just kidding.
529.
By the way,
Just kidding.
Yeah. No, it happens.
Thematic ETFs is such better marketing than smart beta. That's such a better name. I know that's two different things, but I'm saying if you had to compare,
Yeah, who
Thematic
doesn't like
sounds so much cooler.
thematic?
I still don't even know what smart beta means, if I'm being totally honest. And I'm in the space, and I don't really know exactly where that starts. And
It's just
stops.
it's quantitative, but
Factor investing.
people have trouble spelling quantitative. Physical environment related themes saw an increase in AUM of $350 million. On the other hand, disruptive technology related themes saw the largest AUM decline of 1.6 billion, followed by those related to people and demographics, minus 420 million. At a theme level, cybersecurity and clean tech led the gains, while emerging markets internet saw the largest decrease in AUM. So a lot of this is just backward looking, like what did the stocks in the category do? I could probably tell you which thematic ETF took in money or gave up money. And that's never going to change. It doesn't matter if it's an index or it's a manager. People like whatever just worked most recently. What is physical environment related? Is that just like clean tech?
I
Is that
think
what
that's no. I think that's like maybe part of that. Maybe that's like infrastructure. Some of that stuff doesn't fall nicely into GIC sectors, so it gets classified as thematics, right?
People and demographics. So that's like
That's like a millennial ETF or something like that.
I was gonna say like they made one for like Trumpy people, and then
Yeah,
the
they had the
ESG
MAGA.
ones
They had
are
the
for-
MAGA ETF.
Is it right? Okay.
All that stuff's crazy to me. They also have like
So you
Catholic
wouldn't go-
values ETFs
Hold
and all
on, you
this
wouldn't
stuff.
go there like hook up with a celebrity who's got like a very specific niche audience and build an ETF around that kind of personality cult. That would never be worth it to you.
I mean, it could be.
Let me give you an example.
By the way, I don't know if that's allowed. That's the trickier thing.
Allowed.
Well, how did
you
the
see
Dave
what, you see
Portnoy-
what goes on these days? What all right.
Portnoy was it? Okay, so Portnoy found
He did that.
There was a loophole though.
Yeah.
right?
What was the loophole?
Well, technically, I think took an equity stake in the index provider.
Yes.
For that ETF,
Not the ETF.
not the ETF. And I think when he put his video out, by the way, that fund's gone from like $500 million to like I think I last looked, it was under 100 million. Just amazing, like
Oh,
the
really?
attrition.
So
100 million.
Oh, it's Buzz is the name.
Did you say
right?
billion?
100 million. 100 million.
Okay.
100 million.
Yeah. That's how big it was at the peak. 500 million.
500, and I think
Vanex
it's below
Social
100.
Sentiment ETF.
And was the peak the first month it launched?
I think it was like the third day it launched or something like that.
Okay.
But he basically, in his video, they like bleeped over the word ETF, and so it was technically him talking about the index. Now, I don't know what
Is that
calls they're
Van,
getting.
was that Van?
That
Eck?
was Van Eck. That was
Okay.
Van Eck.
All right, but so let me give you an example. The Kardashians come to you,
Beauty ETF. I
You're
love
right.
it.
and they
Sorry.
just say
This went from 500 to 94 million, like that.
because it's hard to understand where it fits in a portfolio if it's not going up.
Yeah.
That's it. You know what I mean? Like if
That's
it's
a lot
going-
of stuff. Isn't that a lot of stuff?
Almost everything. I believe me. I have tons of stocks where, as they go down, they make less and less sense.
Yes.
The good news is the rest of the portfolio going up shrinks them in importance.
Right.
So you could just kind of like forget that you bought them. I have a few of those.
That's funny how that works,
the
right?
Kardashians come to you and they say, we want to do an ETF like our 50 favorite brands. And people want to invest in the Kardashian lifestyle. You'd fucking build that.
I totally do. I mean, I think for them, why not do health and beauty ETF? That's actually one I've looked at. That's a
Like
good industry.
Tom Brady says, I
think
want to do like a
yes.
men's wellness index ETF. Build it for me.
If the regulators allowed me to do it, I would totally be all over that.
Why wouldn't they allow it?
I honestly, I mean, coming back to the whole earlier discussion, right? These rules were written
In
like
the 40s.
before Twitter existed.
They didn't want Frank
right?
Sinatra to launch anything.
Right, exactly. No, you're gonna laugh though. The other day, I won't call out the firm, but our compliance folks we work with, we're referring to Joe Montana ad from the 90s with Franklin Templeton as a reason why we couldn't do something. Because as you can imagine, for the weed ETF, we launched on 420. We may or may not have tried to do something similar to this.
Seth
right?
Rogen?
Bigger.
Ooh, okay.
But we were,
Snoop D-O-double G? Maybe.
maybe. So that's where we are, right? It's like, no, the rules are so gray and weird, and people do different things. Some
By the way,
play
you could have got him. That guy is on every commercial that there is these days. It's a
Snoop.
race between him and Kevin Hart. Do you want to do a commercial? Yes. What is it? I don't care. Do it.
So, very wildly off topic, one of my favorite podcasts is Drink Champs. And Drink Champs like a former rapper, Nori, and he just has other famous rappers on, and they get drunk. And he'll do shit like, he'll make you sit there and choose like Nas or Biggie. And if you're Snoop, you're like, can't pick one,
Right.
so you have to do a shot.
Okay.
So they're sitting there drinking Ciroc for like, it's like a 3-hour show.
You got to do that with socks here.
Yeah,
Pick a
we're
stock.
gonna do that to you shortly. That's what the bottle of champagne's for. And anyway, Snoop is talking about his business ventures. It's a really great podcast. Highly recommend it. And it's just about being a 50-year-old and recognizing that like you have so much value when you become that famous to your community in terms of like you can completely shift everyone's focus from gangbanging to like let's make 10,000 entrepreneurs come out of this neighborhood. Like you can do that at Snoop's level.
Yep.
So he gets into that stuff. But anyway, I think he definitely would do the ETF launch with you if you could find the right loophole. You never know. And he's a fintech guy. Fidelity launched a Metaverse ETF. So did you sue them yet? What's going?
That just happened today. You haven't given me time. I've been here.
All right, here's your first chance to publicly respond. No, I think Fidelity is smart to be getting into thematics because this is what the audience wants.
Yeah.
It may not be what the Financial Times or like Jason Zweig or like all of the behavioral guys that we respect so much, they don't like thematics because to them it looks like trend chasing or hype investing. And to a large extent, that's true. But so what? Like thematics are like one of the most popular things among young people to talk about when they talk about investing. They're going to do it anyway. If you're Fidelity, you should probably be there, right? Like offer them a version that you can stand behind. So looks like that's what's going on. You had a Metaverse fund from when? When did you launch yours?
June 30 last year. So
How'd you get that done so quickly? Did you know it was coming?
Well, we were working on it like 6 months before that. So we were
Before Zuckerberg went all in?
Oh yeah, before. That all happened after.
Is that the largest holding in your fund?
Depending, I don't know. The performance has been so volatile for other names. I don't know where it is. Yeah, I think it might be
But
top
big,
three, top five.
It's a meaningful
yeah,
weight.
Yeah,
It has to be.
Yeah, it is.
So how soon did you realize they want your ticker? Do you have an NDA here?
I don't know this story. I don't know this story. You sold Meta to them?
So this is like.
Are you allowed to talk about this?
Not
So this
quite,
is like LeBron
but-
James gets traded to another team and he wants the number 23 and he's got to pay the guy for the jersey number or something, right?
Will signed something. You can't talk about it. So I'm going to actually make up what happened. And don't nod. Don't even blink. So Zuckerberg invited him to a meeting in the metaverse. Now, Zuck's in an astronaut helmet riding a surfboard. And Will steps into the room and he's dressed in a digital tuxedo. And they sit down and they have mock cocktails. And Zuckerberg offers him $50 million for the ticker. So I got to be Meta. And you said, no. All right. I tried. All right. So, but you still have a good ticker. You have METV.
Yeah.
Okay. Good enough, right?
Yeah,
People
less
want it, they know
confusing
how to
too.
find it.
Less confusing too, right?
Agreed. All right. So what made you know that this is where the puck was going and that you had to have a product here?
Yeah, I mean, it is kind of crazy to look back and say we launched this before anyone was really kind of talking.
It's actually incredible.
Anyone was really kind of talking. I mean, that's the holy grail if you're going to launch one of these things, right? You want to time it where you're already out into market. For me, it was reading Matthew Ball's work on the metaverse. I don't know if you guys have taken a look at what he's written on it, but kind of his vision for.
Say more. I have no idea.
He's got a book coming out too.
He's
right?
got a book coming out.
Yeah.
Who is this person? Does he exist or is he fictional?
Maybe both sometimes.
So he used to work at Amazon, right? He used
to work at Amazon. He's a venture investor. He's the index provider for our ETF. So we worked with him to actually put the basket together.
He's been talking
about this for years. Yeah. Exactly.
Okay.
And he kind of defined this whole concept of what the metaverse will look. We still really don't know.
From like
exactly.
sci-fi novels in the early 80s.
Snow Crash. If you've ever read Snow Crash, that was
and
kind
Ready
of what
Player One.
Yes, exactly.
All right.
Less dystopian, but sure, that's kind of where the genesis comes from.
For now, we'll see what happens.
And kind of well, I have views on that. Okay. But I think when we saw Roblox come to market with their direct listing, we were like, I think this is really going to be like one of the themes for the next decade.
Roblox is a metaverse.
I mean,
it's a self-contained metaverse with its own currency, and
it's a self-contained virtual world. Sure, yes.
Well, it's a group of virtual worlds, though.
Yes.
That's what it means to be a metaverse. It's not here's a video game. Oh, this is also the metaverse. It's here are 50 games, and you can make your own 50 using these building blocks, and we'll connect all of them. In the case of Roblox, with a common currency and developer base, but like just that interconnected nature is what makes it a verse.
I think there'll be one, and kind of the way that I like to define the metaverse is it will be a three-dimensional, living, breathing, real-time rendered, high-fidelity version of the internet. So instead of going on your browser on Google and it being a two-dimensional text-based, that's where you start your experience on the web, this will be avatar in a world. I don't know what will be the search engine version of the metaverse. We'll see. But that's kind of the way to think about it. And a lot of people try and associate it with AR and VR, virtual reality, augmented reality. To me, that'll be one of the technologies you access this with. But the concept of three-dimensional living, breathing internet, that's
immersive
what this is going to become.
internet.
Yeah, and Roblox, is a closed ecosystem, right? So by definition, they can't be fully a metaverse. They exhibit a lot of the characteristics of it, to your point, Josh.
I actually think that the whole pandemic use case for that is people working from everywhere. That seems to me like the biggest broad use case for people. You're sitting in a boardroom with everyone in the metaverse, right? Because people are working all around the world or all around the country, wherever. That to me seems like the thing that if Microsoft turned that on or something, then the use just explodes.
Yeah, I mean, they have that, right? Microsoft.
But do people want to attend?
Yeah, that's where I don't know if they're ready for that.
So if you need the goggles to do it or the headset, that's a non-starter. So let's say we get past that. The technology advances. You could just be sitting here like the three of us.
By the way, if we start having meetings in the metaverse, I'm going to severance myself so I don't have to sit through those. Okay?
I mean, you saw Captain America, where like all the people like on the security. Robert Redford is in person.
I don't think
he has like a virtual meeting with 10 people from around the world. You know the scene I'm talking about?
Yeah.
Okay, so everyone's a hologram, but they're all technically in the same room. I think they did that on Star Wars, the Star Wars prequels 20 years ago. Like this has existed in movies for a long time. So if and when it happens, it's not going to be that exciting for people. It's like, oh, virtually I could appear to be sitting next to you on a sofa. Yeah, like, woo. So that part's not exciting to me. What seems exciting to me, and maybe you guys capture that in the fund, is being able to transport rewards or tools or whatever that you acquire in one game into another environment or game.
Well, that's where NFTs like that. That's to me. That's
so
where I get
that's the
excited
role that
about
NFTs are going to play in the metaverse. Can you explain that a little bit?
Yeah, I mean, I think I don't know how much you guys have kind of watched or learned about Roblox or Fortnite or Minecraft, or if your kids play any of them.
All of them, yeah.
But they're these entire fully functioning digital economies. In case of Roblox, based on Robux,
right?
Where they are acquiring a new outfit, or in the Fortnite, maybe it's a dance.
It's a skin or a dance.
But the problem, or if you want to call it a problem, is I'm now beholden to Epic Games or Roblox or Activision Blizzard for using that digital item. And in the case of NFTs, you can theoretically allow for ownership not to be the IP owner, or the IP can be transferred actually to the individual user. And think about the idea: if I put 100 hours into Roblox, earned a really cool outfit, and then I can take that into maybe a coming back to your example, maybe a meeting in whatever Microsoft's
I'm going to
version
buy an
of the.
invisibility cloak. That's going to be my first thing I buy with all my
I
crypto.
was going to say, I don't think Ben Carlson is that excited to be able to walk into
I think
a
Ben
meeting
likes it.
with us, still dressed in his friggin' Robin Hood costume from whatever game he was playing. Oh, look, Ben's here. Ben's here for the investment committee. And look, he brought his bow and arrow.
Yeah.
It's so great that was interoperable and you could bring that into this environment.
I think it's a
lot of
generational
this will be lost
thing.
on us,
I think it's
obviously.
a generational
Yes.
thing in large part, right? I mean, you look at kids today and they are they're not just playing games on these platforms.
games
They're
are
hanging out.
Games are so video
Okay.
games is such a big business, and for me that I mean I got into it a little when I was younger, but it's so much bigger and better now. I think.
I'm glad you said that. My kid made it, my son made it through the pandemic because of Fortnite. And most of the time, they were not even playing the game. It was group chat.
Totally.
There'd be 6 of them or 4 of them or whatever, just talking about like virtual school that day or whatever, literally talking through the game, like with the controller on the floor. And I think that there's a lot to that. Just kids interacting with each other in their skins from these games, in their avatars. As ridiculous as that seems to us, it's second nature to people under the age of 20.
No,
and we all have to accept that.
100%. I like to make the analogy, when I was growing up, hanging out with friends after school, it was AOL Instant Messenger, right? That was where you'd go to hang out. Today, like that equivalent is in one of these.
Yes.
It is in one of these worlds, and
So
that
why-
whole concept gets lost on a lot.
So
of
why wouldn't you just buy AMD and Nvidia? If you think the future is everyone spending 3 to 5 hours of their day in a virtual environment, why wouldn't you just buy the companies that make the graphical processing units that are going to render all of these images and graphics and make that realistic?
Yeah, I mean, NVIDIA is a large holding in the ETF. I think that's the kind of more of a picks and shovels way to play it. If that's kind of more,
Well, you can't make any of this without it. Like
No.
you cannot make a virtual environment today without GPUs.
no the
And
computing
there's 2
pow-
companies
yeah.
making all the GPUs.
Yes, the computing power that's going to be needed to have this kind of come to light in the way that we think it might is going to be incredible, like beyond anything we can currently contemplate. Like high fidelity real time rendering is just it takes a ton of computing power. And then you have companies too, like Unity is an example. I don't know if you're familiar with Unity.
We know
Unreal
Unity.
Engine from Epic Games does something similar. Those are the engines that power these things too. So they're kind of another picks and shovels type.
Doesn't
player,
that also unlock a use case for crypto where you're just going to be paying for everything in there with crypto, whether it's NFTs or some sort of token, I guess?
Certainly. I mean, like I think that crypto is going to play a huge role in this whole ecosystem.
Speak for yourself. I'm in the Euro metaverse. I only use euros. What's the most interesting company in your metaverse ETF that most people have never heard of, and what? Not like a stock pick, but like what's a company that we should all be aware of?
I'll throw out Matterport.
Okay, I own that.
Okay, so
I'm only cutting half of the stock. It's very exciting. What? I swear, I'm not even joking. No, I know RJ though. I talked to the CEO. They seem to be very integral to a layer of the metaverse that doesn't yet exist, where we start rendering real environments that
Yes.
exist in the world and having you be able to visit those places virtually. Like, I feel like Matterport's going to be like very involved.
I said they need to change the name to Metaport,
Metaport would be good too.
they should.
right?
They should. Why not?
I'll run it by them. What else besides Matterport?
What else would I throw out there is interesting that no one's heard of? A lot of it does end up being larger cap in the metaverse theme because these
Okay,
are the
hit me.
companies that are, well, I mean, there's Meta, Facebook is a
heard of that one.
large holding. Snap, doing a lot of interesting things in AR.
Snaps in the metaverse.
They are.
Why is Coin in here? Is that because of the NFTs?
Because of the NFTs.
Okay.
Which they just launched, yesterday? Or they launched the beta for it. It looked
What,
kind of like,
their marketplace?
yeah, it looked kind of like Instagram meets OpenSea.
So I was going to bring this
terribly
up. John, pull the Coinbase Bitcoin chart up here from later in the doc. So I looked at this the other day. Coinbase, since they went public, they're now underperforming the Bitcoin price by a wide margin. Does that
Like a gold miner and gold.
is
right?
that because they have so much? I would have thought that because of the volatility and more people trading, that they would hold up better than the actual price of the cryptos.
Well, I mean, earlier you just brought up, I think, how retail trading, at least that was for equities, has come down a lot. I wouldn't be shocked if that's the case for crypto as well.
We're going to do this today.
Maybe that's not true. I don't know.
We're going to do this today, actually. Maybe we'll jump there now. Schwab, the retail frenzy, this is my personal opinion, but I want to get your take on this because I think you're more plugged into that world. I think we've seen the peak of retail trading for the cycle. Not that all the traders are going to pack it up and go home,
Yep.
but I think we're lapping that February, March, April period from 21, and all the numbers are way lower. So Schwab just reported earnings. They were supposed to earn 84 cents. They came in at 77 cents. Customers placed 6.58 million daily average trades in the first quarter, which is a decline of 22% from the same quarter last year. That's a pretty big fall off now that we've lapped the meme stock moment. Net revenue was okay, 4.7 versus 4.8 billion, but that's because they make money from a lot of other things besides traders. Bloomberg is saying that 17% of U.S. equity trading volume came from retail investors by early March, which was down from a peak of 24% in the first quarter of 2021.
You know what else is impacting this? So Robinhood has increased their margin rate like 3 times already. Margin rates are higher because interest rates are going up.
Which means less shares traded.
Yes.
And probably less interest, quite frankly. If you can't turn $5,000 into $15,000 as easily, then it's probably less interesting for you.
Is that really like impacting Robinhood traders though? Are they looking at the margin like rates?
Yes.
Like, you think?
Yes. Robinhood traders buy options on margin. Believe me, they're. Anyway, I think March 21 is going to be like 1999 and 2000 was for my generation, for like the millennial Gen Z.
Yeah.
Unless there's an even crazier meme moment at some point, which I suppose could happen, it's hard to imagine how Robinhood, Coinbase, Schwab, Fidelity can replicate the level of excitement for trading that we saw toward the tail end of the pandemic, especially given how much the markets had gone up into that moment. What's your take on that?
No, I mean, look, I haven't been doing it as long as you guys, but like that was unlike anything I've literally ever seen. I mean, besides
every person you knew was talking about trading.
Yes,
all the time.
Yes,
yeah.
And like even smart people were like, "Oh, I'm just gonna buy GameStop because like this is fun." Like I can't remember that ever being the case. But I mean, look, that was the craziest period ever. It probably will be. And it was crazy because it didn't just impact those names that people were getting squeezed on the short side. You started to see like cracks in the market then that are maybe now kind of coming to light. But no, I think we're not going to get back to that level of activity. That's why the comps are, that you just mentioned are what they are. It's not because people aren't involved in the markets, because last year was insane.
And the stocks that people that are now doing well, energy stocks and financials and
not
industrials.
Yes.
There's no one wants to be, no young people wants to own those.
Do you remember all those?
That's a great point.
Remember
honestly.
all those headlines about how like every hedge fund is now going to have a Reddit strategy, and they're going to hire somebody just to watch the boards and Twitter about their Do you think all those people have been fired yet that were hired to be the chief meme officer at a hedge fund? I don't know if those people are still employed.
I think the quants that do that kind of stuff can do some pretty cool stuff, and they're probably doing that on Twitter and every other platform and Discord and you name it. They're probably doing that, scraping and getting 2 bips of alpha on a trade just because they can.
I just read about this guy that runs Melvin Capital.
Yeah.
The restructuring that they're going to do.
Yeah, are you kidding me?
So he's going to go from 30% carry to 20% and eliminate the high water mark.
Steal. That's a steal.
If you're paying those fees again, you deserve to pay them at this point.
He's down 50% in 18 months.
What's the point of the high water mark in the first place then?
He's down in half from first quarter 21.
He's down a half, it came out?
50%.
Oh
and
my God.
So now he's going to shrink the fund. He's going to shrink the fund.
It didn't shrink itself?
It shrank itself, and he's going to go from like 7 to 5 billion and lower the carry and eliminate the high water mark.
People are willing to give anyone second, third, fourth chances now. Like Belfort is selling these huge like $40,000 crypto conferences or something. Like
Gary's novel, he was talking Lake Success. Gary Steingart.
That was the hedge fund one. I read that.
Yeah, the joke, one of the best jokes in the book, the last chapter. It's this hedge fund manager who literally blows his whole life up. Like, loses his wife, loses his fund, SEC investigation, like, ends up riding around the country on a dirty Greyhound bus trying to, like, figure out his life. The joke is he gets another comeback in the last chapter, and he makes a ton of money and then loses more. And then he gets another comeback. And, like, people just keep giving him money because he has, like, a famous name. So it's almost like you can't fall so far out of favor once you get to a certain level is like the joke of it.
Yeah, I mean,
So-
like Plotkin's super respected, or at least had been until GameStop is one of the best short sellers on the street, right? So,
Yeah.
you know,
I think he
and
made
you know
money
how-
for a lot of people for a lot of years.
And you know how
could
the
coast on
name of the
that.
game works. If you can get in and say you got your clients into, you know, someone who has a big name,
Yes.
you know, people like to see that. So I'm not shocked. I'm not shocked, although, you know, getting rid of the high watermark is
Name brands are super important in hedge funds, and it almost doesn't matter like what the track record is at a certain point. It's just like, oh, it's a name,
yeah, exactly.
and that's hilarious to me. Okay, good for him. Congratulations to Melvin Capital. It's a great situation. We're gonna do something quickly on crypto. You guys have a payments fund, but you're not really big in the crypto arena, or you are?
So we didn't launch the payments fund. We have it filed out there.
filed.
We
But
haven't launched it.
But crypto
It
will be
wasn't
part of it, right?
No, when we were actually looking at it, it was more, you know, Adyen, PayPal. Thank goodness we didn't launch it. It probably would have gotten crushed.
Very out of favor.
Very,
sector.
very out of favor.
Yeah.
So nothing in crypto. We're trying to do something in crypto, but as you know, the SEC won't allow you to do anything ETF related. I mean, all we've got is Bitcoin futures. We've thought about doing Ethereum futures, but even that, like they won't even touch that right now. So that's
I tell you
the-
something. You've been really forward thinking and grabbing these niches before anyone else. That seems like that's almost like trying to launch an S&P 500 fund at this point. Like you
yeah.
know it's
No,
going to be
it is.
done 10 times by people much bigger than you.
No, I mean, if I'm being totally honest and transparent on the strategy there, if you're not first, if you can't somehow become first there, you don't bother. You don't
We're
bother
first
launching.
three even.
I don't even think that. Look at the volumes on the Bitcoin futures ETFs. It's like 99% in the pro.
But you already know like Sun and Shine is going to beat you because this is like he wakes up every day.
for the spot. For the spot.
Yeah,
probably.
Well, you're not going to construct it differently.
No,
Bitcoin is
it's
Bitcoin.
not. Yeah, no, I don't know what we want to do
You
there.
should
We
just
want to
use green energy bitcoins in your fund. That's one of the funniest things I've ever heard, by the way. Here's my hot take. Crypto is super boring. Bitcoin, every day I wake up so excited to see, is it going to be 39,000 or 41,000? Those seem to be the only two prices that Bitcoin's allowed to be now.
Isn't
And
that
it's-
good?
I don't know. It's boring as shit. I either want it to go to 100,000 or zero, and I really have no patience for anything in between.
But
Have I
people-
been spoiled?
Yeah, it needs to have something like this happen, I think. To
What?
remind people that it's just not going to be this easy all the time.
Yeah, why isn't it making new billionaires every week? Isn't that what we grew accustomed to with this whole thing?
Well, I don't know. You can't have it both ways, right? I feel like when it was insanely volatile, you know, over the past few years, people said, you know, you can't touch this asset. It's just, you know, so risky. You can't put it in a portfolio. It doesn't fit the mold.
Not a store of value.
And now
but
it's like
not a medium of exchange.
Right. And
too
maybe now it's
volatile.
starting to tick some of the boxes that people were kind of memeing that it never had in the first place now.
If Bitcoin is not minting new billionaires, air quotes,
No
minting
use
new
case.
billionaires,
That's it.
what is the point?
No, it's fair.
Nobody's getting rich right now.
That's fair.
Really bothering me. All
Also,
right.
gold had some nice revenge. Over the last year, gold's up like 9 or 10%. Bitcoin's down 20-something percent.
Ben, you just don't understand the metaverse. Should Twitter be a private company?
So this was Ben
You and,
Thompson.
you and Michael are talking about this a lot.
Well, Ben
this week,
Thompson
too?
at Stratechery, yeah, he had a piece on this. Some of these numbers are crazy. He said that Twitter has over 19 different funding rounds, including pre-IPO, IPO, post-IPO. They've raised like $4.4 billion. The company in total has lost a cumulative $861 million in its lifetime as a public company. So that's pre-IPO.
One of the
not-
worst tech stocks of the last 10 years, easily.
They've had 33 earnings calls. The company's reported a profit in 14 of them.
Right.
His whole point was that you're just not going to get a long enough leash, whoever the management is, whether it's Musk or someone else. Like it has to be a private company to try some new things out and try some different models.
I don't know. What's your Twitter take? Are you a big Twitter guy?
Oh,
you
yeah.
a user?
Oh, yeah.
You love it, right?
I love it. But I've also used it as an advertiser for our business. And it
course.
sucks.
Yeah.
It's not like that.
That's what Thompson's point was. It should not be an advertising business. It should be
You
subscription.
bought
and-
like you
Oh,
bought,
that makes
You
sense.
bought
Yeah.
promoted
That makes
tweets?
sense. Yeah, and they don't do anything.
Because you know who's seeing those tweets? Bots.
Yeah, exactly.
Not
Yeah,
actual people on there.
I totally believe it.
Right.
And in that sense, yeah, maybe they should be. Maybe they should be a private company and not have to deal with quarterly earnings.
The problem is private company under whose sway, right?
Elon.
I mean, okay.
I can't believe. So he sounds like he cobbled together the funding. I can't believe it sounds like he's actually going to make a push for it. I thought this was just an ego thing. He wasn't going to do it. Do you think everyone's saying?
I was right about this, and
But-
Michael was wrong.
How about this? Do you think
Nick was wrong too?
there were
Leslie.
so many? Do you think he's reading Matt Levine going, he's not serious, he's not going to do this, and he goes, yes, I am. I'm going to do it.
Yeah, no, I think he's being goaded into doing it by
think
everyone
we
saying he's
egged
not.
him on, yes.
I 100% agree. But part of the news today was that 21 billion is his own equity that he's putting up. So like, he's not like free riding somebody else investing in this. He's like willing to put up half the money himself.
There's
It's like
also
not
like
bullshit.
There's not an easy path to make Twitter super profitable though. It's not an easy company to fix.
No, his point is it can't be fixed with public shareholders. And I actually think he's right. Because if they really wanted to fix it, fire all the board members who are a joke, and none of them even tweet. Take board members from the most active users of the service. Like put Gary Vee on the board immediately.
But do you remember the
put Mark
Simpsons
Andreessen
episode?
on
Josh,
board.
I think we get you back on Twitter,
That
and
never
we'll hit
fucking
70 a
happened.
But
share.
do you remember the
Life-
Simpsons
life
We'll hit
episode
We'll hit 70 a share.
where Homer's brother is a car manufacturer and Homer makes a car and it's the worst car in the
Yeah,
world?
Danny DeVito's in that.
Okay, so that's the one where if Twitter was up to like the users, like if Elon just said every poll is going to be what's happened next, it would make it worse because the users.
Not a committee though. One user.
Yes,
yeah.
I agree.
Take 10 super prominent Twitter users who have some basis of like financial or business acumen, right? Get Mark Cuban, get people that actually tweet and that have built and sold businesses in their lives. Put them in a room, incentivize them with not just your Twitter following, but here's stock. Figure out a business model that's better than advertising. And if you have to get rid of half of whatever you're claiming are monthly average users, whatever the metric they use now is, we all know it's all fake anyway. Close those accounts down. Make the user experience amazing. Make it an amazing user experience. And I promise you, people will pay a subscription to keep using it. That's the business. You can't do that when you're a public company. You can't say no more ads, no more bots, no more totaling up fake users. Like we're just literally going to make Twitter an amazing experience, and we're going to ask $3 a month.
Oh man, they'd lose so many people.
Yeah,
if
but
they did
the
that.
people they would lose
the
suck.
same people that are canceling their Netflix, they're going to
Dude,
cancel their
if you
Twitter.
won't pay $36 to be there, then you're not contributing anything there.
Yeah, that's a fair
Charge
point.
the
That's a fair
charge
point.
the power users.
Like, this is no offense. It's not classist. I feel like if you're a power user of Twitter, right, there could be a spectator tier. But if you're somebody that's using it every day to tweet and you don't have $3 a
Yeah,
month
that's fair.
for that,
That's fair.
then how good could your tweets be? You're
Hey-
probably just a fucking noisemaker.
At $3 a month, though, are they even doing that well with no ad revenue? Like, you
Okay.
need to look at the numbers.
I'm glad you asked. I thought about this. They claim 200 something million users or close to 300 million users. There's no way that's true. 50 million highly engaged, highly motivated users who are paying into the system. No ads, no bots. Twitter would be sick. It would be like 08, 09 Twitter. And I was there. And we built that thing. We built Finance Twitter. I was like Finance Tweeter number 4 or 5, literally.
Who else was there?
Linzen, Heidi Moore, Kelly Evans when she worked at the Journal. It's a very short list.
I didn't even know Twitter existed.
And then it was a whole lot of fake traders who were running schools. Like,
Yeah.
like I'm a consistently profitable day trader, blah, blah, blah. Pay me and I'll teach you how to trade. Bullshit. But like there were, Phil Pearlman was there, right? It was like a very, very small nucleus of us. I remember getting Barry on, like the worst thing I ever did, setting up his Twitter account for him. Now I want to go in there and change his password. But like it was good. And the people who were there were motivated to keep it good. Because it was like meaningful to have those
Think about
conversations.
if you charged like for our subset of finance Twitter, whatever that means. If you charged people to be on that, that is a group of people who would definitely pay for that, to follow the markets and analysis and charts and all the stuff that people do. If that had its own little subgroup, that's what Thompson was saying. Like, we need your own little subgroups and have them create their own rules.
But that could be a Discord now. That could be a Slack channel now. Twitter doesn't have a monopoly on the ability to build that. That's one. Two, the hardest thing in the world is to sell a subscription to your own Twitter, because every day you wake up like, I don't think I'm giving these people enough. Like, what if I'm not giving people enough to justify what they're paying me? And you feel guilty.
No, the subscription would not be to you. It would be to Twitter.
That's right. Twitter should allow you to create a community and then sell a subscription to that community.
Right.
Not sell the subscription to follow you.
Right.
It's too much pressure on a creator.
Yes.
Shit, I haven't tweeted in 2 hours. People are paying me. The meter's running. That pressure needs to come off. It really should be about interests. And then if you're screening people out because you have people that are paying, you're probably going to lose a lot of misanthropic, nasty, angry people who are there for the wrong reasons. So anyway, I'm available if anybody wants me to consult. The last thing we're going to do is fixed income. Ben, let us know what you're thinking here.
All right, I put this out earlier this week. I looked at all the big bond ETFs. So 20 plus year treasury, 7 to 10 year.
Do we have this?
Corporate bonds.
On screen.
There it is. 3 to 7 junk bonds. And I looked at the drawdowns compared to the S&P. This is as of a couple days ago, but a couple surprising things here. Every single bond there has a worse drawdown than the S&P right now. This is like drawdown from all-time highs. Junk bonds have the shallowest drawdown, which is
Hold on. Let's go through this. TLT is 20-year treasuries.
Yeah.
So its duration really killed you this year.
Down nearly 30%.
Down 30%.
Actually, the peak for that is from March 2020, I believe. So this is all-time highs. So it's been falling for a while because the rates got so low. But the fact that, have we ever had a period like this where every bond is getting crushed more than the stock market, and the stock market's down? This seems like a very bizarre market environment to me. And I don't know if that means something's going to break, or we're just going to see a really weird reallocation from bond investors going, holy shit, I didn't know I could lose money.
You build a 60-40 portfolio, and the 40 part is more risky optically than the 60 part.
Even though yields have come up and bonds should be more attractive than they were a couple of years ago. But now people don't look at that. They look at their losses and go, get me out of here. I don't want to be in this anymore.
Dude, you could buy 5-year treasury yielding 2 3/4% right now. It was basically yielding almost zero, like not that long ago.
Exactly.
That's a very big difference. I think in
But do moves this quick? Because before, when yields rose from like the 60s to the 80s, it was a slow stair-step approach. This has all happened basically in a couple of months. So I'm just surprised we haven't seen some sort of, I don't know, credit hedge fund blow up yet, or something go really wrong.
I thought that we would see massive damage in risk parity strategies, and I have not heard any of, like, people that are leveraging bonds. Apparently, they're all appropriately hedged. Like, why aren't we hearing about any blowups there? Any theories?
I'm not smart enough to come up with a theory
Me
for
either.
that.
So
Me either.
the risk parity ETF it's RPAR.
What is it?
RPAR.
RPAR, risk parity ETF.
What does it do? It mimics a traditional risk parity strategy.
Yeah, I'm guessing. So it's down.
It looks like a piece of shit.
It's down 13%. So that's not great. It's not the end of the world.
Not the end of the world. It's not enough leverage there, clearly.
That much. But I'm just saying, like, do these bond losses potentially make people say, I need to just own more stocks?
I think it has.
Right?
I think
Is that what's kept the market afloat?
Yeah. I was joking with Batnick about this a few weeks ago, but I honestly believe people that lost 8% in January and February in a treasury fund bought Apple instead. I think there's like something to that.
I mean, Apple trades like that's the case.
Yeah.
Or maybe they're putting it to energy materials and, but that's not, I mean, those aren't sexy areas, right? But maybe even retail's doing that too.
They are this year.
Yeah, that's true.
Matt Phillips did this thing at Axios. The yield on the 10-year inflation-adjusted treasury note is about to flip positive for the first time in a very long time. So real 10-year treasury yields are about to go actually positive, which offers meaningful competition to other things that you can invest in. Not that that's such a great return, but it's not negative, and it was very negative up until very recently. What do you think about his premise? Let me read this to you. When real rates on treasuries are negative, savers, including investors and business leaders who buy government bonds, basically lose a bit of money on the deal. That makes saving unattractive compared to spending. So people tend to spend and the economy tends to strengthen. When real rates go positive, it means savers can actually make a bit of money via the interest on their savings. They have a reason to save more and spend less, which can take some of the wind out of the economy's sails. Anything to that?
I mean, the fact that it's still barely positive.
Not far enough to...
I don't know. My big worry is how isn't there a ceiling on rates that, I don't know if it's 3% or 4%, where the government has to say, like, we can't allow these to go any higher because of the interest we're going to be paying on this debt?
Yeah. They can't fund the government at a certain point.
I mean, I know they could just borrow short term and the Fed's rates are still low and have a ways to go, but it seems to me there has to be a ceiling on this at some point.
My assumption is 3% on the 10-year brings out a lot of buying.
When do we cut rates again? That's what
they're doing. They're raising rates to cut them, right?
I mean, look, if you look at the long-term trend for rates, I mean, it's like, yeah, we've moved up a lot, but I mean,
we're back to 18 levels.
Yeah, exactly.
Right. It's
and we were all scared then too, right? I mean,
it's not a general. It's the speed I think has caught people off guard.
Well, it's because we were at literally zero this time, right?
Yeah.
Like that's part of it too.
Let me know when the Fed has like taken down, let's say 30% of its balance sheet reduction that they said they were expecting to do. Let me know where things stand at that point. I think it'll be a very different situation.
Is any of that stuff going to happen though? I mean, things get political at a certain point too, right? Like
you may not get that far.
Yeah, I don't know. Maybe people, maybe the Fed's not looking at QQQ
my hot take.
though.
The market has already done so much for the Fed. I don't think the Fed ever even gets to 2%.
They don't need to. The market went there.
That's what I'm saying. The market has done all the work for them. I think they can take their time, and if something does break or roll over, the Fed will be like, all right, we're just gonna we changed our mind.
Good thing we didn't. Yeah, good thing we didn't do all those rate hikes you guys predicted. That'd be a nice way to go.
Gotcha.